Hi, welcome back. And today we are going to analyze the fact that gold is going down and why gold price is falling, all the factors that affect it. When you hear about gold prices, you may think that it's a fixed number that fluctuates very little. However, the price of gold is constantly changing and can swing wildly in either direction. In the past decade alone, the price of gold has risen from $300 per ounce to over 2,000. That was in the right. If you see the chart here, we have a very strange movement between 2011 when the price was above 1900 and all the COVID crisis 10 years later we revisited that high and we went even higher. But the price of gold is falling for weeks and even months with high inflation. So today we are going to study all the factors that affect the price of gold. Understanding these very factors will help you better understand why the price of gold fluctuates so much and what effects it has on other markets such as the stock market. What determines the price of gold? The price of gold is determined by the intersection of supply and demand. If the demand for gold is high and the supply of gold is low, the price of gold will increase. On the other hand, a low demand for gold combined with a high supply of gold will decrease the price of gold. So basically, we have a number of 5 factors that will affect the price of gold. Number one, interest rates. Number two, inflation. Three, currency markets. Four, supply shocks. And five, other investment choices. So let's go one by one with these factors. The factor number one that we should take into account is the factor that we gold is an asset that doesn't give you a return. So it's quite sensitive to the level of interest rates. So if you see now in the futures market, you will see that the market is at the moment of this update, we are in 2022. The Federal Reserve is increasing higher and higher inflation, increasing the interest rates level. Sorry, and soon we will have a 3 or 4% being discounted by the market in a few months. So we are seeing a hawkish Federal Reserve that is fighting the level of inflation. Sometimes this relationship is inverse between the Federal Reserve's increasing interest rates and the price of gold tends to go down. But that should not be a direct an inverse relationship that is fixed in times. Sometimes it's changed. So you have to be quite you have to be very conservative with that relationship because it's not stable in time and will not allow you to go and trade something that easily. So the first factor is that you have a supply and demand. That's the basics. Let's go to the basics. Where do you get the best information about the supply and demand for gold? You get the best supply and demand statistics at the World Gold Council, though you will get some surveys that will tell you the annual supply and annual demand. This statistics is public. Just go to gold.org and you can study according to the World Gold Council the statistics about the gold production and the demand. What is the supply? What is the supply? The supply, the level of production for gold annually is between 4,000 and 5,000 tons per year. And you will see that the price of gold doesn't follow this relationship pretty well. But it's very important to notice that this level of production is informed to the World Gold Council and states quite stable there. So you have the mine production and the recycled gold, that is the supply, which is stable, about a quarter of that annual gold production. From the demand side, the statistics will show you that we had a decrease in the demand for jewelry fabrications, temporary with the COVID crisis, but you have a very stable jewel fabrication demand over the years. And the level of investment is much more volatile. You will see that the level of investments is composed by the physical bar demand, coins, metal coins, ETFs, the exchange trading funds, that all together are the components of the world gold demand. So if you see that the demand for gold has decreased between 2020 and 2021, according to this website, it's considered one of the best sources for world supply and demand statistics. And this is very important to notice because we are in a very high environment, but the demand of gold has been decreased in the investment size. If you check the demand for all types of components, you will see that the year 2021 was a bit lower than the classic demand in the annual size, which is quite stable, above 4,000 tons per year. This is that statistics. I have never found a very good analyst making money with these fundamental studies of supply and demand. I'm more of the charts guy. So in order to determine if the price of gold is going up, you should first have to understand what factors affect the supply and demand. The most important factors that affect the supply and demand for gold are mining production and investor demand. Mining production, the mining of gold, occurs in different parts of the world and is subject to supply and demand. Mining production can increase or decrease depending on many different factors. Among the most important factors that affect mining productions are government regulations and gold discovery. That is when the mine finds new gold reserves that should be changing the price of gold when there is new potential supply heading to the market. Investor demand is the other very important factor. The amount of gold that investors are buying can change over time, as you are seeing in this chart. The main factors affecting investor demand are economic growth, inflation, and interest rates. This is all about the first factor, that is supply and demand. One of the other things, that gold itself is a currency. It's considered a currency and it trades like a currency. The amount of gold that is traded between countries and across borders is significant. This means that the value of gold can be affected by worldwide currency markets. A weak dollar can drive up the price of gold. A strong dollar can drive down the price of gold. So this is like an inverse relationship. If you check all what happened with the COVID crisis, you will see a great experience. The price of gold started to go up before the COVID crisis and started to increase. The market was pricing that the Federal Reserve was about to print money to pump the economy because the COVID crisis was crushing everybody, all the sectors. So the market was pricing that the Federal Reserve was about to print money, and the price of gold went up all the way up to and higher of the levels of 2011. So when the economy is recovered from the COVID crisis, other countries also embark in money printing. So the Federal Reserve started to move up, announced that they were going to increased interest rates, and this was switching the interest between different currencies, different assets, and the US dollar. That means that the dollar eventually turned stronger after the COVID crisis against other currencies that were also printing money and faster. So this is one of the factors, the perception of the strengths between the different currency markets and the different currencies traded in the market. So let's go to the next part, the interest rates and inflation. Interest rates and inflation are important factors that affect the price of gold. Interest rates and inflation can change over time. So let's go here to the United States. You will see the charts that we are ranging between the 2 and 4% for almost 20 years. But the COVID crisis made an explosion in the levels of inflation because central banks turned to money printing in a big way. The same case was for Europe. You see, this is a chart of the inflation levels in Europe. You will see that the level of inflation was also in a range between 0 and 2% inflation per year in Europe, and then back with the COVID crisis, inflation is now about 8% in Europe and the United States at the moment of this period in 2022. So both areas, economic areas, had in levels of inflation, and that was picked by gold, that the value of money was going down. So eventually the Federal Reserve started to move the interest rates up. That is what is keeping the price of gold controlled. This can lead somehow to interventions in the market. So when interest rates are low, it's a sign that the economy is growing slowly. This can lead to higher demand for gold. When inflation is high, investors tend to buy gold to hedge against inflation because you can always sell gold for its melt value. But what has been happening is that even though the price of gold was up, the markets increased, the interest rates and even the inflation stayed high, the price of gold started to go down and the people left their positions. If you see that here, the price of gold went quite down. So the truth thing is that gold is not really a hedge against inflation, and it really doesn't respond so very perfect with the levels of interest rates. Yes, you should see an inverse relationship. When the interest rates go up, the price of gold should go down. But this is not the perfect formula, and this relationship is not stable over time. The same thing should happen with inflation. High inflation, you would expect high prices for gold. But now we are seeing high levels of inflation and the price of gold is going down. This means that the market believes that with new interest rate hikes that are coming in next month and the coming months, and you will see in the forward curves of the interest rates, now this movement up here, it means that the market believes that the Federal Reserve will continue to increase interest rates and they will control inflation. Thus, it's giving the signal that the inflation is going down and you won't need so much gold, and that's what the price of gold is going back down. That's what the market is telling the investors. So far, this is happening. So one should understand that the use of gold as a hedge against inflation is not really effective, but the real use of gold is as a hedge against governments. When everything is going bad, that's when the price of gold will react. That happened with the crisis 10 years ago in 2010, when Europe was failing, when the United States was failing too. That sent the price of gold up. When things go back to normal, the price of gold tends to go down. This is what's happening. So after the COVID crisis, countries went back to normal, the Federal Reserve started to increase rates, and that's bad for gold. When things are normal, it goes down. A new factor now that we should take in consideration is the supply shocks, also badly and famously known as the gold manipulation story. A supply shock is when an event happens that causes the supply of gold to decrease. This can drive up the price of gold because there is less gold available, and supply shocks can happen for many different reasons. For example, a natural disaster or a war can decrease the gold supply, and supply shocks are rare and can have a significant effect on the price of gold. So sometimes you can see supply shocks. It means that you can see a new supply coming to the market. That could be governments sending gold surprisingly to the market, and that could be in multilateral organizations like the IMF that caused the rumor that they were about to sell gold to the market, and that took the price of gold according to some information that was an order for President of France Emmanuel Macron. That was a very known story of 2021 when there was some announcement that the gold price was going to be stopped by France, adding pressure to the IMF and sending IMF gold reserves to the market, and the market received that information, the gold market, and the price of gold went down. So you can see that sometimes government, to control the market expectations of inflation, sometimes they send information to the market that they may intervene with their ammo, the international ammo, which is their gold reserves. And there has been lots of conspiracy theorists, very well documented by the Gold Antitrust Action Committee, where they have all the information, documents about how the governments and even the Bank of International Settlements intervene in the gold market, creating gold swaps between the central bank members to keep the price of gold stable and to swap and move unused gold from the vaults to the market to stabilize the international financial system. So there is quite information here, and I have to say that the people from the Gold Antitrust Action Committee have been one of my mentors, and the people who taught me and sent me the information that it's real. Governments and big banks intervene in the gold market from time to time to stabilize the financial system. So if you check this website, you will see and you will find all the documentation about it. And the next important factor that affects the price of gold is other investment choices. Let's say that in the market there is a trend and everybody is looking at a different asset like Bitcoin. Bitcoin is really functioning as a implied replacement of gold in the past. It's international, it doesn't depend from the central bank. You can save money there, and people perceive them as a strategy for storage of wealth. So the price of Bitcoin has been used and attracting money for savings and for investments. This was like a really important competitor. Sometimes this type of competition for gold comes from different asset classes. When there was a boom in the real estate market, this boom in the real estate market created a competition for the price of gold, and the money went for real estates, went after real estates. And sometimes, from time to time, gold has competitors. And lately, Bitcoin has been a very important competitor for wealth storage. So far, Bitcoin has been correcting very strongly from its highs above 60k all the way down to 20k. But this is the level of volatility that happens regularly in Bitcoin. That doesn't mean that Bitcoin will continue to go up in the future, but that Bitcoin and other assets come to the market to compete for the money with gold. So these are all the factors that that affect the price of gold. So far, I am not a fan of fundamental analysis. I believe that it's very hard to find the real statistics and the real gold supply and the real gold demand of all the world. I believe it's very hard to get all the pieces of the puzzle. I stopped doing that and I moved to a different school called the technical analysis, the price, the following of the charts, and lately, in the last 2 years, the development and coding of algorithmic trading. That really, this coding were my mentors of all my mistakes, because I was coding how to trade gold and what is successful, and I was able to trade over time and learn from my mistakes. So these are all the factors affecting the price of gold. My outlook is that gold is now facing a market correction. Is quite stable here in the 1700, and silver is extremely low from historical point of view, but it's now in 18. So the market is very bearish for the short term, because they are expecting rate hikes, and that will fight inflation. The Federal Reserve is fighting inflation, so this is bringing down the price of commodities and the price of gold. So the level of silver now, which is around 19, it means that this is very, very important area right here for silver. We are about to fail that area, and it means that silver could go all the way back to 16 with increasing interest rates, and we are just in the middle of the rate hike cycle, just in the middle of that. Not enough. So the range for silver is between this range 17 and 19. This is the range that silver may enter now. That's a risk for silver. The price of gold so far has shown very solid strength in this area, which is this area right here, which is 1650. That's the area that gold has not really given any signal that may go below this level. So this is the area here for the retest of these support levels, but there is no real signals that gold could go below this level so far. And surprisingly, it's coming from below the 200 moving average for the rescue, which is a very important level that investment funds look for the long term. So we have this level coming to assist the chart and giving us support that we are heading to this level as a worst case scenario so far. I hope you enjoyed this update, and thank you very much. Bye bye.